Welcome to Behind the Books with Brandy, the podcast that makes taxes, bookkeeping, and small business finances easier to understand. Now, here's your host, Brandy Bodine, owner of BB Taxes and Notary. Hey, y'all, welcome back to Behind the Books with Brandy. I am Brandy Bodine, owner of BB Taxes and Notary. I'm so glad that you're here. This show is where we talk about taxes, bookkeeping, and small business life in plain English without making you feel like you need a financial degree just to understand what's going on. Before we begin, let me remind you that this is an episode for general education only. It is not for personal tax, legal, or financial advice. Every business and tax return is going to be different, so make sure that you get advice that fits your own situation. Now, today we are going to be talking about a subject that can make even the most successful business owners a little nervous, and that is setting aside taxes. When you're self-employed, whether that's a content creator, an influence, or name, image, and likeness athlete, or anybody that is earning income outside of that traditional W-2. So if you're working a regular W-2 job, it's going to feel like your taxes are fairly automatic. Your employer is going to take out the federal income tax, your Social Security, your Medicare, and any possible state taxes that you may or may not have. But when you are self-employed and you work as an independent contractor, you run a side hustle, you own a small business, sell products online, or get paid through a 1099, whether that's from earning money from social media platforms, brand deals, affiliate links, sponsorships, or that name, image, and likeness agreement, nobody's going to be taking out taxes for you. Once that money hits your account, it's going to feel like it's all available to spend, but it is not. Part of that money may need to go to cover supplies, equipment, editing tools, travel, marketing, software, your agent, management fees, business expenses, and hello, you have to be paid as well. So a part of that may need to be set aside also for federal taxes. That does not mean that you're going to panic every time you get paid. It just means that you need a plan before tax time sneaks up. So a lot of people get their first 1099 when they start their side hustle, or they sign on to their very first brand deal, go viral on social media, and think, man, I did not make that much money. How can I possibly owe? The surprise usually happens because no tax was withheld from the money as it came in. You may have bought several thousands of dollars during the year, used much of it to keep your business and your content creation going, and then found out at filing time that the tax bill was way more than you expected. And I want to say this very clearly. Owing taxes does not automatically mean you did something wrong. It just means that you earned income that did not have taxes withheld from it along the way. And for many self-employed people, creators, influencers, athletes, taxes can include federal income as well as state employment or self-employment. Self-employment tax generally helps fund your Social Security and your Medicare. Self-employment's typically around that 15.3%, although the actual amount of the total someone owes is really going to depend on their income, expenses, filing status, and other household incomes, credits, and deductions. So there's really no magic percentage that's going to fit everybody. But there is a simple habit that will help nearly everybody, and that is setting aside money as you earn it. Do not wait until April to find out. Tax season is going to be so much easier when you've prepared for it all year long. So think about it like this. If you know you're going to have a big electric bill coming out next month, you don't spend every dollar in your account before that bill is due. It's the same thing for taxes. The money may not be due today, but that does not mean it's not coming due later. And waiting until tax season to figure out can leave you trying to come up with a large amount of money when the income may be inconsistent, especially if you're an influence, an NIL athlete, a creator whose income spikes from one deal but may drop the next month. Setting money aside as you go is going to give you choices. It gives you time to review your numbers. It gives you time to make that estimated tax payment. It gives you time to ask questions before you are in a full-blown panic. And honestly, it lets you enjoy the money you do have with a little more because you're not accidentally spending the tax portion. So before you know how you can set aside, you need to be reasonably clear about what your business is making. So that brings us right back to that last episode, keeping your business money and your personal money separated as much as possible. Your bank balance is not the same as your profit. Let me see that one more time because that is very important. Your bank balance is not the same as your profit. You may have 5,000 in your account from brand deals, NIL payments, affiliate payments, business income, but that does not mean that you made 5 grand in profit. Some of that money is going to be need to be spent for equipment, travel, editing, production costs, management fees, upcoming obligations. You remember the electric bill we talked about, and taxes. And some also mean you may have to personally pay yourself. But for tax purposes, you generally start by looking at your business income and subtracting all of the ordinary and necessary business expenses. You need to know what those are. Please contact your local tax accountant. They can help you with that. But that's going to help you determine what your net profit or your net loss was. Why tracking that is important because tracking income and expenses matters so much, especially when income is coming from multiple platforms like TikTok, YouTube, Instagram, Twitch, podcast sponsorships, NIL deals, or freelance work. If you're not tracking where it comes in and what is going out, then you're just guessing. And guessing can lead to either setting aside too little or holding back so much that you make life harder than it really needs to be. Now let's talk about the question I hear all the time. Hey Brandy, or hey BB, how much should I be putting away for taxes? Well, a common starting point for many self-employed people, whether you're a creator, an influencer, an athlete, is to set aside a percentage of their net profit, not necessarily a percentage of every dollar that comes into the account. For some people, 20 to 30% of that net profit is a reasonable starting place. But again, starting place. This is not a promise that everyone will owe the exact same amount. Your actual needs can be higher or lower depending on things like household income, if you have W-2 wages on the side, what your filing status is. Does your spouse have income and withholding? What are your business expenses, including production, travel, equipment, editing, and marketing? What tax credits will you qualify for? Do you have children or dependents? Do they have other income sources like investments, rentals, additional gigs? What is your business structure? What state do you live in? Do you have state income taxes? Here in Florida, we do not have state individual income taxes, which makes things simpler for Florida residents, but that federal income tax and that self-employment tax still apply. So please do not hear 20 or 30% and assume that that is going to be your forever answer. Use it as a place to begin to build that habit. Then review your numbers and adjust accordingly. It's a simple plan that works. Very practical setup. Open that separate savings account or a sub account. If you have Square, they have these beautiful little sub accounts where your money can go into it from credit card sales. Then name it something obviously like taxes, do not spend. And then every time you get paid, whether it's a brand deal, an NIL payment, an affiliate payout, a revenue from freelancing, transfer your tax percentage, whether it's 20, 30, 15, whatever you want. Again, it's based on your individualization. Take that trans percent, put it into that account. Let's do an example. You receive $1,000 from a sponsorship. After considering all related expenses, you decide that 25% is what you're going to move. So now you're going to move $250 of that automatically into your savings account. Now, the remaining money is not personal spending money. Those may also be used for business expenses, reinvestment needs, savings goal. But at least at this point, we have protected the tax portion before it disappears into the abyss. Some people make the transfer every time they get paid, others do it once a week, others do it twice a month when they're reviewing their bookkeeping. The best method for you will be the one that you actually keep doing. So, a lot of creators and influencers, NIL athletes, small business owners don't earn the same amount every month. One month you may land a great big huge brand deal, and then the next month is going to be like crickets. And then one video may go viral where another one may not. So while one deal may be large and the others are smaller or in appearance to the partnership, that is normal. Your tax plan needs to be flexible enough to move with your income. When your income is higher, set aside more. So when your income's higher, aim for that 30%. When your income is lower, set aside that 20% because it's based on what you're actually earning. The goal is not to guess perfectly, it's to keep reviewing and making adjustments before you get too far down the road. Now, many self-employed taxpayers, including creators, influencers, content makers, they make estimated tax payments during the year. An estimated tax payment is just generally your way of saying, I am going to pay all my income taxes. Um, and again, that's paying on the income that's not already subject to withholding. So not your W-2s, just your 1099s, NECs, 1099 miscellaneouses. Um, those there, we're going to be really focusing in on holding the taxes off of those because remember, W-2s are already going to have those taxes pulled off. So for individuals who are following a regular calendar schedule year, you would make your estimated payments on April 15th when you file your taxes. That would be technically your last payment. Um, or your first, sorry, that would technically be your first payment for the new year. And then June 15th, September 15th, and then January 15th of the following year. Now, if a due date falls on a weekend or a holiday, you're going to move it either before. I would always remove it before. So, like if April 15th happens to be on a Saturday, bet I'm going to be paying it on April 11th. So, but the IRS generally says that individuals need to make estimated tax payments if they think they're going to owe at least $1,000 or more when filing, after subtracting all your withholding and refundable credits. This is why it's, again, so helpful to look at your numbers before tax season. And please remember, sending an estimated payment does not mean that you filed the tax return. It's simply a payment of what you think you're going to owe for the year. So how do you know what to pay? Well, the IRS 1040 ES worksheet is one tool I use to estimate and help people pay their federal taxes during the year. Again, your tax professional can help you review your income streams, brand deals, NIL contracts, platform payoffs, affiliate income, and any freelance worker, along with expenses and W-2 income to make your estimate make sense for you. But if this is your first year earning as a creator, an influencer, or an NIL income, you're not going to have a prior year self-employment number, and that is okay. You can estimate based on what you're expecting to earn and then just develop as your year develops. Please, please, please do not confuse your tax account though with an emergency fund. Your tax savings is your tax savings. We're not going to touch that once we've made it. It stays there and we only touch it for those 4 dates. Remember, 4 dates being April 15th, June 15th, September 15th, and January 15th of the following year. If you have to borrow money from your tax money, be honest with yourself and make a plan to replace it. Otherwise, you're not solving the problem, we're just moving it more towards down the road. So here's my bottom line. For every dollar that you earn as a self-employed person, creator, influencer, NIL athlete doesn't belong in your spending account. Set aside the tax money as you earn. Keep it in a completely separate account. Review your books regularly. Recheck your plan when income changes and do not wait until tax season to figure out whether you're prepared or not. You do not have to be perfect. You just need to be intentional. If you're self-employed, a content creator, influencer, NIL athlete, or 1099 earner, and you're not sure that you're setting aside enough, or you're wanting to make sure that you are setting aside, BB Taxes and Notary can help you get a clearer picture. You can book an appointment with us. Our link is listed below. That way we can review your income streams, records, and help you build a realistic tax and bookkeeping plan. If this episode helped you, please follow Behind the Books with Brandy, leave a rating or review if it's available, and share this episode with someone who's earning money online through either NIL or a side hustle and may not realize that taxes do need to be set aside along the way. Thank you so much for spending a part of your day with me. Keep building, keep learning, and keep a little bit of that income protected for tax time. Until next time, this is Behind the Books with Brandy. Thanks for joining us for Behind the Books with Brandy. Follow the show so you'll never miss an episode. And remember, good records, smart planning, and the right guidance can make all the difference. Until next time.